Hello everyone, I hope so you will be fine. So guys, today we are going to practice some questions and our topic is income statement and statement of comprehensive income. So I'll repeat quickly the basic idea of income statement and statement of comprehensive income, and then we will go through the practice questions. So here we go. Guys, this is the format, whatever is showing on your screen right now. This is the format for income statement. So I'm going to explain this format quickly, although we have covered this format in the lecture. So let me assume here, for example, we have three segments, for example, or three products line. So we have a product A, we have a product B, we have a product C. For example, we are selling these three products. So I'm assuming that so this product C or the segment C we have sold in this year, for example. Okay, we sold it. So any segment which we have already sold in this current year or which is available for sale, so it is classified as what? Discontinued operation. And I am assuming here this segment is sold in this year. And these two products or these two segments are continued operation. Okay, because still we are running. So now this is what I'm assuming, and based on this assumption, I'm going to explain the concept of income statement first. So guys, please remember, so whenever we prepare income statement, and if you have continued operation and discontinued operation, so we need to split our income statement. Okay, so in two section. So first section is for income from continued operation, and second section is for discontinued operation, and then you will get as a result of net income. So here we go. So for example, this section is for continued operation, and I'm assuming here, so first figure we will write it here, net sale. Net sale, we know how we get, so sales minus sales return, right? So I'm assuming, because this is the summarized version I'm explaining, so first we will write net sales of product A and product B. Okay, because this whole section up to here is for product A and product B, because these are continued operations. So from net sale, we will always deduct cost of goods sold. So how to calculate cost of goods sold? This format I'll explain with other questions in this video. But here I'm assuming we are provided with this value. So then this will give you what? The value of gross profit. Okay, guys. So then from gross profit, we will deduct selling and administration expense. So this is called income from operations. And please remember, guys, this section is called operating section of the income statement. Up to this operating section means, here we will write revenues and expenses for regular sale and purchase. Okay, like simply whatever we have a regular operations, regarding those operations, whatever revenues we have whatever expenses we have, we will record it here. Okay, then we will add here other revenues and gains, and we will deduct other expenses and losses. So please remember, here the word is other revenues and gains, or other expenses or losses. So other expenses or losses, obviously we will deduct. And usually other revenues or other expenses include what? Those revenues or expenses which are not related to our regular operations. Okay. For example, other revenues may include interest income. Maybe you are selling goods, but you have invested somewhere and you are getting interest income. So other revenue may include interest income. Other gains, what? You are selling product, but maybe you sold some non-current asset, you got a gain on that, so that can be written under other gains. Then you have other expenses. Other expenses are other losses, maybe interest expense, you can write it here. Other losses may to say maybe loss on sale of non-current asset. Okay, then what we have here, then this is called what? Income before tax. So once we will deduct income tax expense, now this is called income from continued operation. Here you have to remember one point. If you don't have discontinued operation in the question, then this figure is your net income. But if you have discontinued operations, if you have discontinued operation, then this figure, whatever you got it here, this will be written as income from continuing operations. And now this section is for discontinued operations. Okay. And whenever we write discontinued operation, I'm assuming that we have sold segment C and we got a gain on that. What we got? Gain on disposal. Okay. Gain on disposal, for example, one value we have 10,000. Okay. So please remember here, if we have a gain, so this is the value of gain. From there, we will always deduct the tax. Okay. Tax effect of that transaction. For example, I'm assuming tax is 40%. If I'll take 40% of 10,000, so it will give you what? 4,000. So 4,000 I will deduct, and then my net gain will be 6,000. So if, for example, if you have a, instead of this profit, for example, if you have a loss, let's assume if this is a loss, so then this value 4,000 will be positive value, this value. Okay. So if you have a loss, for example, I'm assuming loss of 10,000, then tax effect will be positive 40%, 4,000. So net loss will be 6,000. So please remember, whenever we write items under the discontinued operation, so we have to write post-tax values, post-tax value after taking the effect of tax. So this question they may ask you, like that under discontinued operation. So which value we write? Pre-tax, post-tax, post-tax we write always. So now guys, so let's assume this was the gain of 10,000 and we have a tax because on gain we will pay tax. So that's why this is written as a negative. So we got a net gain after tax 6,000. Now this is gain from discontinued operation, net of tax or post-tax. Understood? And then guys, once we will take income from continued operation plus minus income from discontinued operation. So once I'll add these two values, so this is called what? My net income. And this is the format of income statement. Understood? And now guys, please remember, I want to tell you one more thing. There is another concept. Please remember that concept is called statement of comprehensive income. Statement of comprehensive income, not income statement. Statement of comprehensive income. So statement of comprehensive income, okay, it shows comprehensive income. And how we calculate comprehensive income? Comprehensive income always include net income plus minus other comprehensive income. If you add net income plus minus other comprehensive income, so that is called comprehensive income. So net income, how you got? It's a simply income statement. I told you just because net income you will get in the income statement. Now the point is that which items are included in OCI. So as per US GAAP, so there are 4 items are there. How many items? 4 items are there which we record in the section of OCI. That will not be the part of income statement. No, that is the part of other comprehensive income, and other comprehensive income is the part of comprehensive income, because comprehensive income includes net income plus OCI. So in OCI we have a 4 item. Which 4 item we write? These 4 items. Number one, the effective portion of gain or loss on hedging instruments in the cash flow hedge. Please remember guys, this topic is not in the CMA part 1, but there are some hedging instruments are there like future contracts, option contract. If you have a gain or loss on that, okay, so their effective portion or the gain or loss, we always write in the other comprehensive income. We don't write in the income statement guys, okay? Because these 4 items we write in the other comprehensive income. Then you may have unrealized holding gains and losses. Unrealized holding gains and losses due to changes in the fair value of available for sale debt securities. Okay, actually guys, this is a kind of our investment. So when we invest in the preferred stock or the bonds of other company, that can be classified as available for sale, because there are 3 categories. This we will see in the future lectures, okay? Or the lecture is available on my YouTube. You can search the investment in debt securities. Understood? So there are 3 categories. Trading securities are there, held to maturity securities is there, available for sale securities there. So please remember, unrealized gain or losses, not realized. You should remember what is realized gain or loss. If you sell something, sell, and you got some gain or loss, that is realized. But if you sold certain investment, for example, I hold, sorry, not sold. If you hold certain investment, for example, I hold bonds or preferred stock, and their fair values has changed due to changes in the fair values, whatever gain or loss you will get, that is called unrealized. Realized gain or loss means when it will be sold. Okay, if you hold something and the value has changed, that is called unrealized gain or losses. Okay, please remember unrealized gain or losses on available for sale debt securities will be written under other comprehensive income. Don't write under income statement. Then translation gains and losses for financial statements of foreign operations. For example, sometime in group of companies, right? You may have subsidiaries in other country. For example, your parent company is in USA, but subsidiary is in, for example, Europe, and subsidiary is preparing financial statement in euro, and parent company is preparing financial statement in dollar. So what you will do? You have to convert euro into dollar while preparing consolidated financial statements, right? So all foreign assets and liabilities you will translate into dollar. And due to changes in exchange rate, sometimes you may get gain or losses. Please remember translation gains or losses. You also write under other comprehensive income. And the fourth item is certain amount associated with accounting for defined benefit post-retirement plans. Actually, this is relevant to pension, guys. Pension accounting is not there in the CMA, but if you have certain amounts relevant to pension or post retirement plans, especially defined benefit post retirement plan, we will write under OCI, other comprehensive income. This topic is not in the CMA at all. Okay, so being a student, you have to remember the list of 4 items. First item includes gain or losses on hedging instruments. Then second item includes unrealized gain or losses are available for sales securities. Third includes translation gain or losses. Fourth includes amounts relevant to defined benefit post-retirement plans. So these 4 items you always write in OCN. Now I'm moving here. As I told you, we have another statement which is called statement of comprehensive income, which shows comprehensive income, and comprehensive income is always equals net income plus minus OCI. So net income, simply it is your income statement. And I told you just income statement format. This is the format of income statement on your screen now. This is your income statement. If with this net income, if I will add OCI item plus or minus OCI 4 item, then this is called what? Comprehensive income. Okay, so I'm assuming, let's assume net income we have here 70,000. Okay, just assume. So now here we will write here other comprehensive income item, 4 item. If you have any loss on anything, you will deduct. If you have a gains on anything, you will add. Understood simply. So out of those 4 points which I just shown you. So if you, let's assume I'm saying that this is 4 items, gain or losses in other comprehensive income. Okay, and this is the total of that. So if I take net income, this net income plus minus OCI. Okay, let's assume. So this is what is called total comprehensive income. Understood? Now, guys, I'm going to show you questions. So please have a look, and because this format will help you to solve the question. So we have a question number 1. First, I'm going to practice here. This is the first question on your screen. First question is, they're saying according to US GAAP, where on the income statement should a multinational company report the loss from the disposal sale of major operating unit? Actually, you sold operating unit. It means it is your discontinued operations because you sold it, and they told you, so we got a loss on that. So where you will report, obviously, as I told you in the income statement, so we have a value for continued operation, that there we will start net income. I'll show you format again because you should not make a mistake. Look at it. This is the format. So if you have a discontinued operation and continued operation, because in this question we have a discontinued operation. See here. So this section, first let me remove this section from here till here, till here. It is called income, like it is for continued operation. Like this is income from continuing operation, right? And this section is for discontinued operation, and then you will get net income, right? It means income from continued operation plus minus income or losses from discontinued operation. This is called what? Net income, right? So now the question he is asking, where discontinued operation you are showing. Obviously, you are showing discontinued operation in between income from continued operation and net income, right? In between these two value, you are showing discontinued operation. And whatever the values of discontinued operation, we always show post tax, right? This is the answer. Actually, now going back to the question. So question number one, sorry, they're saying where you will show this loss on discontinued operation in the income statement. So obviously they're saying that report the loss pre-tax. No, we always report post-tax, after tax. Okay, whatever if you have a gain or loss on discontinued operation, that will be reported post-tax, not pre-tax. So this is not a correct thing. Okay, then they're saying report the loss net of tax. Net of tax means a post-tax. It's correct here in a separate section between income from continuing operation and net income. Yes, I told you income from continuing operation and net income. So in between there, what income are gain or losses from discontinued operation is there, right? So it means this is the correct option. Then see, report the loss net of tax. Okay, loss we will report net of tax. It's correct. In a separate section between income before tax and net income, not income before tax. It is income from continuing operation and net income. Okay, so it means this is also incorrect option. Then report the loss pre-tax. No, we always report the post-tax. So this is also incorrect. So it means option B is the correct option. Now I'm showing you another question, guys. Before moving to this question, let me tell you here, guys, how you calculate the cost of goods sold for manufacturing business. So I'm just showing you format first because I'm revising these kind of things. Maybe you don't have idea or maybe you may forget. So that is why I'm revising the format. So this is the format of cost of goods sold for manufacturers, okay, for manufacturing business. So this is how we calculate cost of goods sold. Starts from here till here. Okay, guys. So So for when we calculate cost of goods sold, first of all, we will take beginning raw material inventory. Then we add their purchases during the period. Then we deduct ending raw material inventory. This is called direct material used in the production. Then we add direct labor cost and overhead cost, both variable and fixed overhead. So this is called total manufacturing cost. Then we add their value of beginning work in process inventory. Then we deduct value of ending work in process inventory. This is called cost of goods manufactured. Then we add a beginning finished goods inventory and we deduct ending finished goods inventory. This is called cost of goods sold. This is the format. So now I'm going to read the question. What is the question? And then we will solve accordingly. So they're saying that requirement is, so you have to calculate what is the amount, okay, for the cost of goods sold during the reporting period. So cost of goods sold you have to calculate. So here we go. During reporting period, a computer manufacturing company used raw material of 50,000. So raw material is given. So here is we have a raw material used 50,000. So this value is given 50,000. Okay, raw material used. Then what? Then they are saying and had a labor cost of 75,000. So labor cost is also given. So labor cost will be added here. Okay, 75,000. And then they're saying a factory overhead is 30,000. Overhead cost is also given. We will add here overhead cost of 30,000. So if you will add all these value, 50,000 plus 75,000 plus 30,000. So this is going to be 155,000. Okay. So this 155,000 is called total manufacturing cost. 155,000. Okay, guys. Then what? We'll go back to the question. Then they're saying other expenses were advertising of 5,000. This is not a part of cost of goods sold. Staff salaries also not the part of cost of goods sold. Credit loss on account receivables, bad debts expense, it's also not the part of cost of goods sold. Company did not have a beginning balance in any inventory account. You don't have any beginning inventory. It means beginning inventory is also zero, and all goods manufactured during the period were sold. It means all manufactured goods were sold. It means we don't have closing inventory also. So beginning closing inventory is zero. Okay, so then what is the cost of goods sold? It means we don't have any other value. So only this total manufacturing cost is going to be your equal to cost of goods sold. Because you don't have any information about work in process, you don't have any information about opening and closing inventory. So it means 155,000 is going to be your cost of goods sold. So if you will look at here, 155,000. So this is the option D. D option is the correct. Then we have another question. They're saying following information pertains to the corporation's income statement for the 12-month just ended. The company has the effective income tax rate is 40%. So discontinued operation, this value is from discontinued operation 70,000. Okay, income from continuing operation net of tax. You know, when we prepare income statement, we need income from continuing operation, right? So that is also post-tax value we need. So that is already post-tax, so 72,000. Then what? Plus minus discontinued operation net of tax. So if you look, this is the value discontinued operation. Discontinued operation, it's 70,000 is given as a loss. But this value is pre-tax. So we need always post-tax. So what we will do, we'll take 40% of that. So 70,000 multiplied by 40%. It is going to be 28,000. Okay. So post-tax value will be what? 32,000, I believe. 42. 42 negative value because this is loss. Okay. Now this, once you will do income from continuing operation plus minus discontinued operation, this is going to be your net income. So net income is going to be how much? 30,000, right? Okay. Then what? Then next item is available, cumulative effect of changes in accounting principle. Please remember cumulative effect of changes in accounting principle. This adjustment we always do in the retained earning, because whenever you change the principle, so whatever the cumulative effect of change in accounting principle, that adjustment is done in the opening balance of the retained earning, not in the income statement. Understood? So this will not go to the income statement, this value. Then what is the net income for the year? So net income is how much? 30,000. Okay, guys. So then we have another question here. Because remember, next question they're saying, given the following data for the company, what is the cost of goods sold? You have to calculate again. So cost of goods sold, what is the information is available? He told you beginning inventory of finished goods, cost of goods manufactured is given, ending inventory of finished goods is given, beginning work in process and closing work in process. So guys, please remember here. So I'm going to show you again the format of cost of goods sold. Maybe it is written down also. Yeah. Please remember in the question, he told you cost of goods manufactured. He told you this value. So look at here. Cost of goods manufactured. It is 70,000, 700,000. So we'll write 700,000. And then he told you beginning finished goods and ending finished goods inventory. So this will give you cost of goods. So this is what he's asking. You don't need to consider beginning work in process and closing work in process from this question. So it means beginning work in process and ending work in process you don't need, because you are required to calculate cost of goods sold. So cost of goods manufactured is given. So now what I'll do, cost of goods manufactured is given. Now we will add here beginning finished goods inventory. What's the value beginning finished goods inventory? Beginning finished goods inventory is 100,000. So we will add 100,000. And then we will minus ending finished goods inventory. Ending we will minus now. So ending we have to check from the question where is given. Ending finished goods inventory is given here 200,000. So we'll deduct. So this is called what? 600,000 is your cost of goods sold. So which is the correct option? B is the correct option. Understood? Now we have another question here. Please remember. So what's the requirement here? They're saying what amount is P's comprehensive income. Comprehensive income, how you calculate? Comprehensive income always equals net income plus minus OCI. So now we have to find out the information. They're saying company has a net income of 11,000. Okay, one value is given plus R minus a positive 1,000 net cumulative effect of changes in accounting principle. This adjustment will go to retained earning, not to the other comprehensive income. Okay. So ignore this. A 3,000 unrealized holding loss on available for sale debt security. Yes, this we take. Unrealized gain or loss on available for sale debt security we take to the other comprehensive income. So this is the loss value. So we'll deduct 3,000. Okay. Then a positive 2,000 foreign currency translation, positive value means a gain. Yes, this we will be added in the other comprehensive income because translation gains or losses will take to the other comprehensive income. Then a 6,000 increase in common stock. This you don't write in the other comprehensive income or in the income statement. Now we can calculate comprehensive income. How 11,000 minus 3,000 plus 2,000. So 11 minus 3, 8 plus 2, 10,000. So comprehensive income is the 10,000. So B is the correct option. Understood, guys? This is how, guys, question will be tested. I hope so it is clear. Thank you so much. See you in the next video.